Are you tired of watching your portfolio bleed red during this brutal stock market correction? Do you find yourself wondering when the selling will end and if it's finally safe to start buying stocks again? Well, you're in the right place because you're about to discover the top 5 signals we look for to determine when a market bottom may be forming. By the end of this video, you'll have a powerful checklist at your fingertips that you can use to assess any market correction and spot potential buying opportunities with confidence. Plus, we have a special bonus video for you today. Stick around to the end of this video where we'll share some exciting news about the upcoming launch of Morpheus Trading Academy, the premier destination for traders looking to take their skills to the next level. I'm Rick Petticelli, head analyst at Morpheus Trading Group, and I've been navigating the markets for over 20 years. If you're ready to stop guessing and start trading with confidence, hit that like button and subscribe to our channel for more actionable insights like this. Now let's dive in and uncover the secrets to spotting a market bottom. So we recently saw the Nasdaq and the S&P 500 both break down below the 20 and 50-day moving averages. The Nasdaq composite, which is the chart right here, sliced through its 50, and that triggered a sell signal in our timing model, and it followed through to the downside, and now we have a market that's in correction mode and currently sitting about, well, the depth of the pullback is 8%, and we've bounced off of that the past few days. So we're looking at an 8% correction off the highs. Our timing model is on a sell signal, but we're waiting for a buy signal. So the first thing we look for, signal number one, when trying to find a market bottom, is we're looking for an index to stop making lower lows. We want to see the bleeding stop. Tough to go higher when you're setting lower lows. So the Nasdaq over the past 2 days has done just that. We had a lower low on Friday, but a higher low on Monday, where the low of Monday is above Friday's low. And on Tuesday, we had another higher low in place. And Tuesday's low doesn't have to be above Monday's low, but does have to hold Friday's low. If the market were to sell off on Wednesday and undercut Friday's low, that would start the count at 0 again. And we'll be looking for the market or the Nasdaq to set a higher low. So as it stands right now, we've completed 2 days of the rally in the Nasdaq. And so once we have an index setting higher lows, we want to look for a strong accumulation day, a big up day with a 1.5% or more advance in the Nasdaq or S&P 500. And this must be confirmed by a pickup in volume. And this sort of day just lets us know that the potential for the market to be bottoming out is there. Obviously, there's going to be some false signals in any indicator we use, and that's fine. We'll discuss more about how we navigate through a false buy signal in the market later on in this video. But for now, once we have higher lows in place, signal one, signal two, after 3 to 4 days, we're looking for a bullish accumulation day, a big volume advance to let us know that the market is potentially bottoming out. So once we have those two signals in place, signal number 3 is we go to the charts. We have to scan and see what's out there. We're not waiting for the market to print higher lows and then we go scanning for bullish stock patterns. Each day we're scanning the market, making a list of stocks that are showing relative strength, that are setting up potentially on the long side. And that's what signal number 3 is once we have the first 2 signals in place, we have to find stocks that are ready to go on the long side. Are there stocks that are ready to go? It could be that there's so much tactical damage in the market during the recent sell-off that we may not have very many candidates, and that's possible. And when that happens, we simply wait for new buy setups to emerge. You don't want to rush into anything or buy something that's not ready to push higher, that maybe, just bounces for a few days and then rolls over again. We're looking for something that has a bullish chart pattern, something like a flat base or a cup with handle or a double bottom, and something that is ultimately ready to go now, meaning that the pattern has symmetry and there's higher lows in place and it looks like it's ready to push higher. And we can give a quick example of the difference between go now versus something that may not be ready to go and may need some more time. For example, SMCI, a market leader through the past few months, finally broke down below its 50-day MA. And although it's bounced higher the past 2 sessions, it has a lot of work to do just to get back to this downtrend line. So we'll need to rally, 40% just to get to the 50 MA and its downtrend line. So this isn't a stock that's really ready to go right now. It certainly could make a big recovery over a few days, but this isn't something that is ready to explode higher from here. And then we take a look at something like a DELL that's still holding above the 50-day MA and broke through the downtrend line and reclaimed its 8 and 20-day EMAs. That's something that has a pattern that could be ready to move out and push higher right away. Maybe another example of a stock that could be ready to push higher is CAVA. And, it may need a bit more time, but it's held above the 50. And if it can break this downtrend line, could continue to set higher lows and then eventually push higher with some help from the market. But that's the idea. We're looking for stocks that are showing relative strength that have held up really well during this market correction. And some of these patterns that I mentioned earlier, the cup with handle, the double bottom, the flat base, we cover these patterns in detail in our Morpheus Trading Academy that we're going to be launching in 2024, the second quarter of 2024. And we'll talk more about the Morpheus Trading Academy a little bit later in this video. So next up is signal number 4. We have major indices setting higher lows. We have bullish volume confirmation, a big up day. We have stocks setting up valid buying patterns. The fourth signal is stocks holding on to their gains. It's more of a market feedback signal. How are recent buys doing? Assuming that we have our first 3 signals in place, we've bought a few stocks. How are they performing? How is the market holding? This is all important feedback and lets us know if we should put more money to work, if the feedback is good, or if the feedback isn't so good. Are we stopping out of positions? Are we back in cash because we stopped out of everything or just a few positions? So there's a lot there to digest. And unlike the first 2 signals, which are more mechanical with the higher lows, and then we have a big accumulation day, the last 2 signals, they're more discretionary in that we have to find quality stocks to buy. And then we're monitoring these buys and some of the stocks we don't buy as well. We want to keep an eye on those and see how they perform. All that is good feedback and will help us to, or I should say, will help guide us through this bottoming out process. And also, we want to think of this bottoming out process as something that occurs over a few weeks. It's not just one day. The feedback takes some time. It could be explosive in 2020 where we had the market bottom out, and then it just exploded higher, and you're just going to put on exposure and keep on increasing exposure as the market goes. Or it could take some time. And that was something that happened back in 2023 where we had, this is the Nasdaq composite once again, where we had the price action, set higher lows and then try to push through the 20 and 50-day MA only to fail and then pull back, then set higher lows again and then try to push through the 50, fail, and then undercut and then rip higher and not look back. So that leads us to the question of how do we handle false buy signals? And the only way we know how to really deal with the false buy signal is to avoid going all in on the long side after we have a buy signal. We can put on anywhere from 1 to 4 positions and see how they do. If they hold up well, then we can add more exposure. If they don't, we back off on exposure. There's no magic answer there for dealing with a failed buy signal. It's, risk management is important, and you have to wait for the positions to show some signs of strength, and then we can add to those positions or put on new exposure. All right, and signal number 5, during this whole process, really, we want to always be monitoring the volume pattern in the broad market average, the one that's, setting higher lows. And we don't want to see the index print any distribution days. And that would be a decline of 0.2% or more on higher volume. And we especially don't want to see distribution enter the market within a few days of our buy signal. While we may be able to deal with one distribution day, if we get 1 or 2, within a few days of the buy signal, that wouldn't be a good sign and likely cause for concern. And if the market were to have issues from there and it were to roll over, well then, once you take out a prior swing low that's held up, then that would negate the buy signal. So if we're long Nasdaq from October 6th and it's pushing higher and it loses the 20-day EMA, the 50 MA, and then by the time it takes out this swing low, we've already got a sell signal in place, and that just confirms it. All right, so just a quick review of the signals we discussed. We're looking for higher lows in the index. We want the bleeding to stop. It's tough for a market to go higher if it's making lower lows. Signal number 2, we're looking for a strong accumulation day. a 1.5% or more advance on higher volume to let us know that the market is potentially bottoming out. And then 3, we're looking for stocks setting up with valid buyable patterns. 4, we're looking for stocks to see if they hold on to gains when they break out. Do they pull back on lighter volume and then push higher? And 5, we're looking for the market to avoid distribution days and to hold the prior low. Well, as promised, we have some exciting news to share with you. Coming soon in Q2 of 2024, we're launching Morpheus Trading Academy, the ultimate destination for traders looking to take their skills to the next level. As an IEAC accredited institution, we'll be offering cutting-edge courses like Secrets of Swing Trading Success, where you'll learn the proven strategies and techniques discussed in this video, which have helped thousands of traders achieve financial goals since 2002. And here's the best part. By clicking the link in the comments below, you can secure your spot as a VIP founding member of Morpheus Trading Academy for free. Don't miss this opportunity to be part of something truly special and transform your trading journey.